Welcome. This is Mary Ellen McGonagle, Senior Managing Director of Stocks here at Simpler Trading with your Weekly Edge show for August 12th. Today, we're going to take a look at some of the more impactful news that drove price action last week. It was a rather pivotal week. Also, we're going to take a look at the current markets. Where did we close? What we can anticipate going forward. And then beyond that, we're going to take a look at the sector and sub-industry groupings as well, all about getting your arms around where that outperformance is taking place so that you can take advantage of that. Also, viewer question of the week, and it's all about, again, taking advantage of where the strength is. We'll review an ETF that had a great week last week and a couple of candidates within that industry group as well. So here we are with some of those news from last week. And first up, the NASDAQ did exit bear market status, and the reason there is because from the mid-June lows in the NASDAQ to last Wednesday and beyond, the NASDAQ has gained 20%, and widely followed, and by definition, is the fact that that bear market label has been removed. So we are in certainly a nice uptrend. Also, the biggest news last week was the fact that the Consumer Price Index, better known as CPI, came in with numbers that were below estimates. And this is talking about inflation. We are seeing pricing reduced a bit, primarily by the cost of gasoline, but other areas as well. And this is what the market wanted to see. We saw a nice rally in response. It means that potentially the Federal Reserve might not be as aggressive in raising interest rates. We also did receive Producer Price Index, PPI, on Thursday, and that fell for the first time since the recent recession. Good news again on the inflation front, as well as news that the initial weekly jobless claims on Thursday came out a bit below estimates. So all news that was well received by the broader markets, as well as consumer sentiment rising amid reduced energy costs. So let's take a look at next week. Industrial production and retail sales numbers will be released, as well as earnings season coming in a little bit strong, and we'll get into that as we move forward next week as well. So let's take a look. Where did the markets close the week? Price chart of the S&P 500 index, and on that Wednesday PPI or CPI report, we did see the markets, the S&P, break above this area of resistance that we've been talking about, and that this is that consolidation period in the beginning of June. So we did successfully break above that. That's very good news. Your outside momentum indicators still in positive territory, and your next area of possible upside resistance is in this range around this 200-day simple moving average, and a move above that would certainly help the markets continue to trade higher. So let's get into behind the broader markets and take a look at where that strength was, because I want you to be able to, as well as those that subscribe to my MEM Edge report, to be able to take advantage of that relative strength. These are sectors that are sorted by RSI, the 11 S&P 500 sectors. This is a 2-month daily price chart view. Two things we're on the prowl for here. First up, again, you want to identify on this upper left quartile your stronger areas, but also, as always, we're looking out for rotation. We're looking for groups that are coming down from these lagging areas and moving up to the forefront. Utilities have been up here for some time, but industrials is an area that is newer. I'll go ahead and share the chart with you, breaking up above this 200-day simple moving average this week, all about strong earnings in a number of underlying areas. And then also financials have moved up here to the forefront. They were the second best industry group, up 5.5% on the week, and I'll share with you in our next segment where the strength is in financials as well as industrials. From here, let's take a look at some of these other areas, because energy is posting way down here in a laggard area. However, I will tell you it was up over 7% for the week. We can see this nice RSI trending upward, MACD in positive territory, and a couple of bellwether names that are now breaking above resistance. So very compelling view there with that energy group. From here, let's go ahead and take a look at some of the sub-industry groupings that can be really helpful in helping you embrace what is taking place in the markets. These are ETFs such as banking. We also have software, medical products, the US dollar, interest rates, and so on. That same RSI indicator, I'm going to go ahead and update it. And again, up here, strength to weakness. Here we are. This is KRE, the S&P 500 Regional Banking ETF, a nice break up above this blue 200-day simple moving average. The group was up about 5.5%, which is very significant, certainly for a banking area. And there are pockets of strength and areas that are reversing with this banking ETF. So one other area that we can certainly take a look at, these are the broader market indices up here in the forefront, but another area that is exhibiting superior outperformance, and that is XRT. This is the retail ETF in the S&P 500, and this is another area that was up quite a bit last week, continuing to potentially reverse its downtrend. Nice higher lows taking place here after a double bottom formation. And one of the reasons for the outperformance here is this concept that inflation may have peaked, and lower inflation is good for these retailers as it will bring in more consumers as pricing eventually begins to be reduced. High earnings are also a reason for retail to begin to perk up here. This is the ETF this week that I will be sharing at the end here, some content as it relates to retail, and then also two stocks to one keep an eye on and one that is in a buy zone. So let's go ahead back and take a look at these ETFs. There are two other areas I do want to highlight. First up here is semiconductors, and for those of you that follow the markets closely, you'll know that we had an early week Tuesday sharp pullback. The group was down almost 6%, all about two major semiconductor firms reducing their growth outlooks. However, those inflation reports were able to push semiconductors back into an uptrend above this 10-day simple moving average. Very encouraging. And then another area in growth that performed with the broader markets, up about 3+%. IGV, the software ETF, maintaining its uptrend also despite a sharp Tuesday pullback when many growth stocks did get impacted. Let's move on down and take a look at the VIX, the volatility index, also known as that fear index. And you'll see that we are in a nice continued downtrend here. VIX closed at about 19.5, and anything in that 18 to 20 range is very constructive for a continuation rally in the markets. It implies market confidence by way of investors, and it is a good thing that volatility is trending lower. It's what we do want to see. I will add that in addition to volatility being reduced, we are also seeing breadth in the markets really expand. So a couple of good things that are really creating nice backwind to the broader markets and their potential continuation rally. So from here, let's go ahead and take a closer look at this XRT. And I will tell you, it is a very equal weighted ETF. So you don't have stocks that are really dominating the performance. So that is somewhat good news because we are seeing broad-based moves in the retail space. And we can see this nice move with XRT finding support above this upward trending 10-day simple moving average. Your next area of potential resistance is this 200-day, this blue line here at about 76.5, and a move above that would be even more bullish. So I did want to share with you a couple of companies that are due to report their earnings next week. Walmart is one of them, super bellwether. They have come out twice now and reduced their growth prospects lower going forward due to high inflation, and any kind of surprise to the upside would certainly be handsomely rewarded. Another company due to report next week is also widely followed, and that is Target, TGT, another company that had a very poor first quarter, high inventory issues, and again, all eyes on this report to see if they're able to come in anywhere ahead of estimates or guide higher. Either of those would be good news. But let's take a look at a stock that is not due to report, but it is potentially setting up. I would say put this name on your radar, and I'll tell you why. I'm going to mark it up. Costco had dropped, but it was more in sympathy with Walmart and Target's pre-announcement. Their news was not as bad, but they did get caught up in the downtrend. So we can see that the stock relative to historical precedents is cheap. And then also I wanted to point out this formation on the chart that is shaping up. And this is called a cup with handle, and ideally we are going to be on the lookout for a base breakout should we see either Walmart or Target come out with good numbers. And that base breakout would be defined as a move above the high. So it will be at about that 551 level. And last week we did see the stock close at 537, so we're awfully close. Any kind of volume on that cup with handle base breakout would bode well for the stock. Your outside momentum indicators are in positive territory. Another name in the retail space, and it is not a position in XRT, but I did want to share it with you because the company already put out their earnings, and let's just take a quick look here. This is Ford Motor, and I will mark this chart up as well. There's one other key ingredient that could help propel the stock higher, but let's go back to this period in late July. Ford came out with their numbers July 27th, and 423% year-over-year growth, 51% above estimates, and we can see the nice uptrend that has been experienced since that news. The company is now trading only at 9 times earnings, and they do offer a very nice yield as well, which is always welcome, 3.7%. But the earnings release did have analysts raising estimates for this year, and that is good news. Let's take a look at some of the other characteristics of this chart. We can see the RSI up here in positive territory. It is in overbought position, but we can see it can remain in that area and still outperform. So again, on the lookout for a move above this 200-day simple moving average, which would be 16.4. The stock did close last week at 16.2, so we're awfully close. And we are seeing nice high volume characteristics during this period of this uptrend. So I anticipate Ford to trade higher. So 2 consumer discretionary names have a little bit more work to do, but are looking very interesting at this juncture. I'm going to leave it at that. Have a wonderful weekend, and I look forward to seeing you here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.